So we came up to this slide yesterday. With the introduction, how to functionality or the position of money brokers. Today, from this slide onwards, I want to start the position of the bankers, who are your main clients. Before I start, I need to ask you all whether you all were able to download the assignment. Did you all download the assignment?
Yes, sir. Yes.
Right.
Yes, sir.
Yes, sir.
Any questions on assignment? Any questions? Anybody have any questions? The assignment, I think I have put some colors to distinguish between certain points. The topic I suggested was regulatory environment of authorized money brokers within brackets AMBs and the need for compliance. I explained what it is and what are the regulations, and I gave a list of Parliament Acts. Before that, I gave you all the 2018 rule number 1, where authorizing money brokers by the Director of Domestic Operation Division, and prior to that, there was letters of no objection issued by the central bank on behalf of the monetary board, and a whole heap of other regulations, and and also the market best practices. Market best practices, which is very, very important. That is to maintain the position and drive the businesses towards the goals for which the money brokers institutions as financial intermediaries were established. Yesterday there was an interesting question. One of the participants asked, when one bank asks you for the name prior to the concluding the deal, which is a market best practice. One of the best practices of the market, where the price discovery function of the market is upheld and then practiced by the money brokers. I know there were strong characters in the money broking fraternity. Even the largest bank, even the regulator, when they ask for the name of the bank or primary dealer who's buying or selling, they would just say no. So I just professionally, I just want you all to maintain the market best practices and then the ethics of best practices. And then we were discussing in the morning with few seniors that at the moment your operational boundaries are merely foreign exchange, spot forward, treasury bills, bonds, money market operations, call money, and then a little bit shorter, medium term money market operations. That is it. It has been there for centuries. Now, young generation like you all has to think out of the box and then try and establish other avenues for business. So today, at the latter part of the discussion, I'll show you the capacity of money brokers, how they should dwell around and then increase the contribution to the market and finally to the economy of our country. So coming back to the assignment, topic is regulatory environment of authorized money brokers and the need for compliance. And the word count I suggested is 1,000 plus or minus 10%. And referencing is Harvard style. And date of submission Tuesday, 20th April 2021 through email. I give the email addresses. Menaka is the assistant director at the Institute of Bankers in charge of this program. And then comes my email address. And writing should be on a Word document on font size 12. And I suggested the paragraphs to write on the topic on top, and straight away copy the paragraph, sub paragraph or whatever. First of all, the acknowledgement, which can be done last. Executive summary also can be done last. Then the introduction, give the background of the regulatory environment. What are the regulations? Name the regulations. You can show them in point form, or you can describe them in a small paras. Then market best practices. And then in that, some of you may want to introduce another para, combining regulations and market best practices. What purpose are they there, and what is to be achieved? Finally, the economic development of our economy, and then money brokers' day-to-day functioning and the practices, how they can contribute to the economic development and the development of the markets, development of financial instruments, and development of the banks and savings institutions, development of non-bank finance companies, and development of large funds like EPF, ETF, insurance, National Savings Bank, and so on and so forth. Then you have to specially comment on the codes of conduct. I think I introduced you all to 2-3 codes of conduct yesterday: ACI code of conduct, Forex code of conduct, and the code of conduct issued by the Domestic Cooperation Department of the Central Bank for money brokers. Then you start the next paragraph: facilitating price discovery. Facilitating price discovery. I imagine that everybody understands what is price discovery is. Does anybody have any question on price discovery? We have on the demand side for spot dollars or forward dollars or treasury bills, treasury bonds, particular issues, particular ISI numbers. And then also on the other hand, there will be supply side for all those instruments. And the volumes matter on the demand side and supply side. And the fact that you all facilitate two-way quotes, bid, offer, two-way quotes. So the guys who are bidding will try to buy at the lowest possible rate. Guys who are selling or supplying will try to get the maximum possible rate. And this demand and supply, when met with each other, it is supposed to facilitate the price discovery, actual demand and supply based price for the spot dollar, price for the forward market, price for the treasury bill ISI and number, price for the treasury bonds, repos, all those instruments. So this is price discovery function, which is very important because the price that is established at this interbank market facilitated by the money brokers is going to dictate terms to the retail market of treasury bills, treasury bonds, retail foreign exchange market for various inward transfers, purchasing of dollars, imports, purchasing of dollars, exports to encash their foreign exchange earnings with the banks. For all of them, the price that they determine at the forex market or the interbank market or wholesale market, that is the starting point. So that starting point will facilitate the retail market prices for each of these products that we discussed. So for that, because of that reason, the price discovery function is paramount important, which is facilitated by the money brokers. And when the money brokers try to breach the code of conduct or breach the market best practices, to that extent, the price discovery function is flawed or will deviate from the actual price based on demand and supply. And the actual producer, maybe farming community, maybe fishing community, maybe garments manufacturing factories. On the other hand, the consumers buying the goods and services, their price to pay or price to receive will be determined by this function of price discovery. And so much so that the contribution to the economy, next para, contribution to the economy has to be facilitated by this wholesale instant market. The market has to be professional. So describing all that, if you need to add some more paras, please add. And you come on to the conclusion. Conclusion should be, I would like you to pose the question first. Are the regulations and the controlling aspects by the regulator and then maybe any other authority, maybe Association of Money Brokers or Sri Lanka Forex Association, the controlling authorities or disciplining authorities, are they doing a good job and what for? And then express your opinion in the conclusion paragraph, that because that will demonstrate your clear understanding of all the previous paras that you have written down, and your research will contribute to that conclusion. If any one of you ask me my personal opinion, if I'm writing the assignment, I would say the regulations, Parliament Acts, Code of Conducts, and the Forex Association and the Money Brokers Association are there to discipline the money brokers, which contribute to achievement of the desired goals of price discovery and the economic development of this country. Furthermore, it will contribute to development of the financial instruments, development of the financial institutions, and development of the financial markets, which will create more jobs for youngsters in years to come. Year by year, there can be increased jobs. Take, for example, Singapore. compare Singapore with Sri Lanka. Geographically, some of may have traveled to Singapore. Singapore is by far the size of Colombo city or even less. But Sri Lanka is a huge country compared to Singapore. But compare the financial market size of Singapore and Colombo. All speaks for the professionalism, discipline, commitment, and skilling the persons who are with the right attitude and the skills. So, I would also love to introduce another subpara called literature study, references of previous websites, articles, books, journals, and then thereby, after all, that have a separate page for list of references that you have scanned through and arrange them in alphabetical order. In the Harvard style referencing of all these newspaper articles, books, journals, websites, regulations, and any other material should be given due recognition to the author first. So, name of the author can be arranged in all those references in alphabetical order. And the referencing line should follow name of the author, publication, date, year of publication, at least those 2 or 3 aspects. And also you can indicate that after the publication, you can indicate the page number of, if it's a book or journal, page number. So this is merely to facilitate anybody reading this your article assignment in search of more details. The person can go visit that particular journal or the website and refer or read through more intensively without any hassle. So when you fill up all these subparagraphs and introduce new ones as you desire, the word count may run more than 2,000, 3,000. But try and prune down to summarize it to 1,000. That's a discipline again. Once you have this experience in your, not only the certificate course of money broking, but in your further studies like degrees, university degrees or master's degrees or MPhil PhDs, you will get a first-hand experience of doing research and writing your assignments, project reports for those exams. When you go higher up in the academic field, academic arena, most of the degrees are based on your personal research and writing. So try and do your best shot for this assignment. And we'll see after 20th of April how far we have succeeded. I think I shared with you yesterday that for the assignment, 50% of the marks will be given for the assignment. And for the exams, then the other 50% marks will be given. Exams will be on MCQs or multiple choice questions. And that they also will be hosted on this Google Meet. And then you will be allowed a certain period of time, 1 hour or 1.5 hours. And we have to complete the exam by and submit before the time expires. All right, any questions on the assignment? Can you see this slide now? Menaka slide එක පේනවද? Hello, can you see the slide?
Yes, sir.
Yes, sir. Can see.
Yes,
Yes,
sir.
sir.
Can see.
Right. Okay. So we'll start with this slide because I did not get a response for the assignment question that I asked from anyone. Please shout out if you have not been able to download the assignment or if you have any questions on the assignment. All right. So what do you see on this slide? You see list of banks on top and 2020 annual performance of key banks. What are these banks? They are your main clients. They are your main clients. So what are these bankers doing in the economy? They are the main intermediaries in the market. What do they intermediate? In simple terms, they intermediate between the central bank and the general public. Central bank doesn't serve the general public individually. Central bank deals with these banks and the general public are asked to deal with these banks. So intermediary, that's one aspect of it, one dimension of it. When it comes to real economy, these banks, now I listed only the licensed commercial banks. There are licensed specialized banks and primary dealers as well. These banks are supposed to accept money from the savers, deposits. And at the same time, these banks are supposed to lend money to the entrepreneurs, or in the economic jargon, deficit units. Savers are the surplus units. What are the surplus? Anybody living in our country, in our economy, they do an economic contribution, produce or service, and then earn their living. Maybe farming, maybe fishing, maybe lawyers, accountants, bankers, doctors. They do that for their survival, their economy, for their upkeep, for their production of goods and services. They are paid a remuneration, and for their survival and maintenance of their families, they do have expenses. So earnings minus expenses, when they have a surplus savings, they would naturally will want to save the money for future or postpone consumption. So postponing consumption, those days happen with their cupboards in their homes. With the invention or with the introduction of banking system or banks, there were trustworthy people, and then the savers went ahead and kept the money with trustworthy people and then paid the bank for safekeeping their money. Is centuries ago. Savings, excess money that they have, or the money that they wanted to keep for their future consumption, they want to keep with the trustworthy individuals or the companies or other entities, and those entities charged, the banks charged the saver for safekeeping. Naturally, they have to have security, they have to have insurance. As time goes on, from centuries ago, these banks discovered that the savings collected can be lent to those who are in need, the deficit units, those who are in need for production of the goods and services, say garment factories for the production of garments and other production of equipment, or importing certain fuel and crude oil and all sort of things. So they wanted money. So the banks lent the money and charged interest. So as time surpassed, these banks earned interest from lending, and then again, to encourage the surplus units to deposit money with the banks, they started paying an interest to the banks. Instead of charging them for safekeeping, the banks started paying an interest rate to savings deposits, savers. This is how it began. What do you think the banks should possess? What extra features these banks should possess to attract excess savings or savings as deposits? Trustworthiness? Can anyone suggest some other feature that you would expect from somebody with whom you would want to keep your money? Trustworthiness alone will not take you too far. It is a good quality, trustworthiness. Discipline and compliance to the rules and regulations is very important. Discipline and compliance to the rules and regulations, coupled with trustworthiness. All these banking institutions are competing with each other on those grounds. If any of them fail in compliance matters or in maintaining their reputation, what will you think will happen to those banks in terms of deposits? The last row, deposit growth for the year. Deposit growth for the year. Can this figure sustain if any of these guys fail in their reputation, fail in their compliance to the regulatory requirements and other market best practices? And as long as this deposit growth happens, they can also facilitate loan growth. See, the deposit growth is 470, as loan growth is 437. That figure is lower figure in all the more cases, because if you generate more deposits, only you can be lending. And that will result in the net interest income, the first row, net interest income. Now, this is only the incremental value for the year, but they have built up over the decades. They have built up deposit base, and then also they have built up their loan or advances portfolio. All those will contribute to the net interest income or the NII. Net interest income or NII. If any one of these banks fail, not only these banks, even the savings banks and the specialized banks and the primary dealers and the non-bank finance companies, if they fail to maintain their reputation, their compliance to the rules of the laws of the land or the regulations stipulated by the regulators, they will lose the battle. So money brokers also being part of financial intermediaries, they too have to maintain discipline and compliance to the rules and regulations. Right? Okay. To generate such a big sum, all this in millions in net interest income, your deposit base and the loan base has to be fine-tuned, increased rapidly. That's one other very important and critical point I want to discuss with you. But since this is a presentation, I have not drawn up any drawings here. But for argument's sake, deposits of banking and finance company institutions, deposit rates usually are at a lower rate and lending rates are at a higher rate. Thus, they have a margin or interest spread. Interest spread, lending rate minus the deposit rate. If the lending rate is 11%, or shall you say, to be more practical, now rates are lending rates around 9%, deposit rates are around 5%. So 9 minus 5 is 4% is the interest spread. Now, when you consider all the deposit-taking institutions, what is the longest tenor of the deposit product that they have? We have 1-year FDs. Some banks have 2-year FDs. And some banks and finance companies have even 5-year FDs. Deposits. And what are the rates on those? Under the current day context, it can be maximum of 7%, maximum of it. More prudent to be at 7% for 5-year deposit. And longest tenor of the deposit product is 5 years. Have you all seen any other product for deposits longer than 5 years? Very rare, or if at all no. When you take the loans or advances portfolio products, what are the tenors or what are the longest period the loan can be arranged? 1 year, 2 year, 5 year, 10 year. The more common is 10-year loans, I think, when you take the total average portfolios. There can be loans for 15 years or 20 years. Guys in your age, if you apply for your housing loan, it can be structured to repay in 15 years. Or if a person is in the age of 20, 25, can go up to about 20 years repayment. Or sometimes some institutions even cater to 30 years. So tenor-wise, just compare and see deposit products, maximum tenor of 5 years. Lending product, maximum tenor of 20 years, shall we say? 5 years again, 20 years. Can any one of us, other than the banking and finance company institutions, can any other person or any other entity take money for 5 years and lend that money for 20 years? Will not survive, isn't it? Cannot do at all. How do these banks and finance companies do it? They, in fact, perform a miracle, isn't it? They always take maximum tenor of deposits, liabilities, 5 years, and they start lending, shall we say, average 15 years. So 5-year deposit side liabilities, 15-year assets. How do they maintain the 15-year assets from the 5-year maximum? Actually, we must compare the highest volume liability. I would guess it's 1 year. 1 year deposit base is the highest volume. The loan portfolio of 10 years is the highest volume. So 10-year loan, can it be financed by 1 year deposit? What are the factors contributing for these banking institutions and the finance company institutions to sustain term assets through short-term liabilities? If you analyze, basically, it is through the new deposits, the last row, new deposits. Each year, to attract new deposits, you have to maintain your trust, you have to maintain your compliance, you have to maintain your reputation. The moment that you fail in any one of those, if you break the laws, if you break your discipline, if you do the slightest thing antisocial, publicly or privately, that will impact the reputation of all these institutions. And thereafter, no one will be able to raise new deposits. What happens? The slightest news in the social media or the newspapers or the television indicating the breach of compliance, breach of indiscipline, contribute to ill reputation of that institution. The depositors will queue up to withdraw their money already deposited, and let alone attracting new deposits. Even the existing deposits will be withdrawn. So the banks and the finance companies will have to face a run. So this is very important, critically important. for the banking institutions to post profit after tax of such magnitude. These critical aspects of compliance and maintenance of reputation is paramount important. So that includes pricing of their products, deposit products and the lending products, and other ancillary services generating fee-based income. In any one of them, if they breach the discipline, if they behave like not disciplined personnel, let alone the maintaining of courtesies when they meet the customers, or when the customers go to the banks and ask for services, or when the banking or marketing officers go to the doorstep of customers, they really have to maintain that discipline. So this slide is important on those aspects to show So in summary, what I was indicating is that to record deposit growth, all the depositing institutions, banks and primary dealers and non-bank finance companies have to maintain the attractiveness, and also they have to maintain the compliance to the rules and regulations and maintain the reputation. And the fact that they need to finance long-term assets for 10 years or more by acquiring 1-year deposits. They have to maintain discipline, they have to maintain the reputation, and then the deposit growth to be maintained to finance the long-term assets. The moment that they fail in the reputation, the deposit growth will shrink and they will not be able to sustain. They will not be able to sustain the long-term assets. Furthermore, there'll be a run on the banks. There'll be people, deposit will be queuing up to withdraw their funds, and therefore reputation and compliance to the rules and regulation is vital and paramount important. So banks as financial advisors has to tailor make the financial solutions to suit the clients. Elderly category of clients as against younger category of clients, and their individual financial needs also has to be addressed. So, and when it comes to the money broking fraternity, your function is not merely brokering. Your functions professionally has to enhance into the category of agents, because basically you have to create your functions. When you cater to a buyer, you have to understand the needs of the buyer, the highest price for their sale, and when you're catering to a seller, the lowest price for the buyer, and when you're catering to the seller, highest price for the seller. So you have to be on both sides, catering to the needs of the buyer and the seller. Same way you can speak of the lender and the borrower. You have to understand their needs, and then you need to cater to their individual needs. So basically, your function is meeting the buyer, the seller, and the lender and the borrower, all right. But you have to enhance your horizons by performing the task of an agent. Basically, what I'm suggesting is for you all to practice the agency responsibilities. An agent who buys and sells on behalf of banks. One employed to buy and sell for banks. So much so that some of the dealers, when I was in active dealing life, some of the banks used to leave the portfolio of sale or purchases with certain brokers, and they are entrusted to get the best price, right? When they want to sell, highest price, and they want to buy lowest price. And that is the moment that the broker fail, and when the bank treasurer comes back and then studies the market and see that he have got a not so good deal from this particular broker, he will be not satisfied. At the moment that at least the market price were or something more were given to the treasurer, they'll be really happy, and then there'll be more business coming your way. So an individual or firm employed by others to plan and organize sales and negotiate contracts for commission. An individual or firm employed by others to plan and organize sales or negotiate contracts for commission. Client is considered the principal and the broker acts as the client's agent. An agent's powers generally extend beyond those of a broker. Duties and responsibilities. Principal communicate clearly and firmly. The principal who wants a job done by an agent has to communicate very clearly and firmly. Accept and settle properly, execute transactions, deals. Accept and settle properly executed transactions and deals. Send, receive confirmations. Pay agents, brokers, fees timely. And the agent's responsibilities: understand and respect the principal's desire. Advise him of the risks and rewards. Provide timely market information to enable him to take best decision. Refrain from concealing information from the principal relating to the transaction and the market. At the moment, would you consider that you are performing all these things adequately, or you are hearing it for the first time? If at least one person speaks up, I will know that I'm in connection.
We are performing adequately, sir.
Very good, very good. Very good. Only thing we have to discuss, and then with the support of your seniors, try and approach the horizons and then jump over the horizons to perform new business, find new clients. Okay, agents' duties and responsibilities continued. Pay due respect to market ethics, professionals and ethics, etc. refrain from earning undue and undisclosed income from the transactions concluded on behalf of the principal. Clarify ambiguities with the principal before execution of transaction or a deal. Send, receive confirmations. Communicate agency brokers' fees clearly. You must ask for your dues very clearly. In the absence of principal, in his best interest, when the bank or the client or the primary dealer is not there, if he has given you some orders, in his absence, you must be doing all the things that you do to achieve the best interests of the principal. A broker. Understand, respect principal's desire, advise him of the risks and rewards. Provide timely market information to enable him to take best decision. Refrain from concealing information from the principal relating to the transaction at the market. Pay due respect to the market ethics, professional ethics, etc. Refrain from earning undue and undisclosed income from the transactions concluded on behalf of the principal. Clarify ambiguities with principal before execution of transaction deal. Send, receive confirmations. Communicate agency brokers' fees clearly. So basically same as the previous slide, agents, duties and responsibilities. Incidentally, the regulator, Central Bank of Sri Lanka, has issued this direction under the Banking Act, Direction number 2 of 2018, dated 24th May 2018. Appointment of agents of licensed banks. Now, money brokers, under the tag of brokers, if you be in that shell, you may not be counted as an agent. But if you see the previous two slides, your duties and responsibilities are the same. But if you rise up to be the agents, you will have more business, more clients, and you can find a lot of revenue in the years to come. So basically, this direction says the bank should obtain prior approval of central bank for any new appointment of agents and ensure adherence to the direction on agents. Formulate policies, procedures, and guidelines on conducting agent banking business. Whatever the functions of business entrusted to an agent, there should be policies, procedures, and guidelines in the banks. Ensure the agents have adequate resources and expertise. Now, if the money brokers are to be considered agents, the bank should be convinced that you all have the adequate skills, resources, expertise, and infrastructure, such as voice recording, maintenance of records of deals, prompt issuance of confirmations once you conclude a deal, and submitting of reports, research reports, etc. Ensure that all risks associated with agent banking business are identified, documented, mitigated, managed, and reviewed regularly. All the risks should be identified by the bank, and that will help the brokers also to identify the risks involved and documented and mitigated, managed and reviewed regularly. Establish systems for consumer protection and complaint measures and relief mechanism for agent banking business. There should be a method to identify the complaints or issues arising out of conducting your business and discuss with the parties involved, and there should be a relief mechanism. Monitor activities carried out by agents and accepting responsibilities for actions, omissions of banks agents while performing duties on behalf of licensed bank. This is to indicate that the bank should bear the responsibility of agents or money brokers when they do something wrong, maybe unintentional, and there should be the responsibility should be also always with the bank. Ensure adherence to know your customer and customer due diligence rules of combating of money laundering and then terrorist financing activities. This last point applies to any financial institution. It applies to any financial institution by the three important Parliament Acts, namely Convention of Suppression of Financing of Terrorism Act 2005, Prevention of Money Laundering Act 2006, and Financial Transaction Reporting Act number 6 of 2006. So in your capacity as brokers, when you deal with any institution or any of your client, they are your customers. You must know fully the details of your client. You cannot escape by saying that, okay, I know this particular bank, everybody knows this bank, but you should be having a particular file and record of the data, key personnel, contact numbers, and if by any chance transactions are happening in the nature of money laundering or terrorist financing, beyond the due diligence procedures or beyond KYC procedures, you should be able to highlight it and then report those things to the authorities.
Hi, welcome to Cargill Online. Please wait.
Sorry. So you should be able to report such activities, however much the client is important. I think you all are aware of the principle relating to KYC and custom due diligence and money laundering and terrorist financing. You all can submit a suspicious transaction report, STR, to the FIU confidentially, and that will be investigated by the authorities of FIU and the law enforcement agencies without divulging the name of the person or the company that the STR or suspicious transaction report was submitted. And they will maintain that confidentiality right throughout until the perpetrators are brought to justice. Okay. So with that, the payment and settlement system we will discuss tomorrow. We are approaching the time of 6 p.m. I don't want to keep you all waiting beyond 6 p.m. in your offices. We have to try and obtain a solution, or we have to indicate where the connection goes offline. So I shall speak to Menaka at the Institute of Bankers and then also seek your particular support whenever the slide is missing, or when the connection is not there, when you cannot hear me, or when you have to ask a question, please unmute and speak up. Or when there's no connection, please use my phone number, then call me and tell me. So before we stop for the day, I want to know whether you all have understood the purpose of the assignment, and then you are in position to start writing the assignment right away. I think today's discussion also gave you ample points to populate your assignment. Okay. The problem is when I am sharing my presentation, I cannot see any one of you. When I minimize the presentation, I can see all of you. Right. I can see there are all 15 online. Am I right? Yes, all 15 are online. So tell me, anyone, if you do not understand the mechanism of doing the assignment, can Niluk speak up? Do you understand?
Yes, sir. The guidelines are quite clear, so I think we can structure the assignment around that.
Right. Thank you very much. Will you start today itself, Niluk?
Can start today, sir.
Good. Okay. Right. Sadharwan, can you start today itself?
Yes, sir.
Very good. Madhushika, Sachitra Bandara.
Yes, I will start today.
Very good. Praveen Stillman.
Yes, sir.
You have an idea of the assignment, what to do?
Yeah, sir. I'll be able to start it today.
Good. Trevor Gomez.
Yes, sir. We'll start today itself.
Very good. Asiri.
Also start today itself, sir.
Very good. Iran Fernando.
Yes, sir. We'll start today, sir.
Very good. Then Bartlett's.
Yes, sir. We'll start today itself.
Yes, sir.
We'll start today.
Super. So when you start, if you have any query, please don't forget to contact me anytime, any time of the day.
Sure, sir.
Do you all have my phone number?
No, sir. No.
I saw the Institute Bank has shared my phone number and details. Anyway, if you want to scribble down, I can read out the number. Not 777. Not 777. 562.
Not 777. 562.
562 019.
019.
Not 777 562 019. All right. So have a good day. Have a very good evening.
You too, sir.